right, welcome. This is the first video in my series, which is going to be called the Bitcoin Macro War Room. Every week, this is going to drop on Friday. We're going to decode the macro on a weekly basis. First, we're going to check the Bitcoin macro and liquidity regime tracker, which is my custom trading view indicator. It tracks liquidity, inflation, the dollar, M2, China. Then we're going to cover what data just dropped. So the CPI, ISM, rates, jobs, FOMC, any of the data from that week. What is the data telling us, right? We should be forward looking, trying to figure out what's going to happen and where we're heading. So we'll go over that. And then finally, we're going to hit the strategy, right? So that's going to be my Bitcoin macro playbook, which shows and answers the question, the most important question that you should be asking yourself every single day when you wake up is, are we risk on or are we risk off? What is the market in right now? Should I be long or should I be short or holding cash? I don't really short. I would rather just hold cash. So let's jump right into it. Let's start off with my liquidity and regime tracker. I'll move my camera here up to the top left so you can kind of see it better. So I look at Bitcoin on a weekly time frame. That is what my tracker, you'll see it on the bottom here. That is what it is built for. It is not a short-term strategy. It is not a trading strategy. It is an investing strategy. So we can go over the inputs really quick. You'll see them here on the bottom right in the table. I just want to note before we do that is that there are about 6 other inputs that I don't show on the table that add to the composite score for this. So there's actually a lot more in here, but I felt like these are the kind of main ones. The nice thing about this indicator is that you can score these differently. You can put different weights on them. So if you think that M2 is more important than the ISM, you can weight it like that and play around with the scores. You can also lag the time series. So if you want to lag it by 10 bars, which is 10 weeks, you can do that. I think a 6-week lag is generally pretty good for this, but I'm keeping it live so you can see kind of what the latest metrics are right away. But anyway, let's go over the actual numbers here, right? What are these and why are they important? So we'll start with the first one, ISM 3-month change. ISM tracks basically the heartbeat of the US business cycle. And in my opinion, and a lot of other people's opinion and research, is that Bitcoin is kind of driven by the business cycle in the sense. It's really driven by liquidity, but liquidity has a relationship with the business cycle, so on and so forth. Long story short, a rising ISM from low levels suggests that early cycle expansion and increased risk appetite, right? Meaning people are putting money into the market, they're not holding cash, etc. So we track the 3-month delta to capture the turning points before kind of the crowd sees them. So that's this number here. You can see the current score is 14.2 because the ISM has been historically low. It's not really where it should be. You'll see these are the peaks and troughs. It usually, when you get to above 60 or around 60, that's usually the cycle peak. Anyway, we'll take a look at all the individual ones, kind of when it makes sense to. So all of these inputs for the system are here on the side. So in case you want to look at these individually, you can look at all of them. These are the symbols that you can plug in to kind of look at all these inputs separately. Let's go to CPI. Pretty straightforward. Everyone knows what CPI is, but it's basically year over year inflation pressure. When it's falling, the Fed has room to basically ease, which means lower interest rates, which is bullish for Bitcoin. Our model inverts CPI. So lower inflation scores higher because it signals potential policy support. Now, M2 year over year, again, straightforward. This is US money supply growth. So M2 is basically direct liquidity. More money means more fuel for risk assets, right? We normalize it and do the year over year change to track basically if liquidity is expanding or tightening behind the scenes. China M2. China is the second biggest economy to the United States, if not bigger in a sense. It depends on how you quantify it. But Chinese liquidity is a global macro lever, right? So when China prints, global assets generally follow. And a high China M2 score means reflation is underway, even if the US is kind of lagging, which has been the case for this cycle, right? China has been printing and the US has still been QT. Interesting dynamic for this cycle. Anyway, that's China M2. It's got a positive score, 64.2. Next up is the dollar, which is one of the most important, in my opinion. It's weighted pretty heavily in my system. And you can see it has a score of 100. That is because the dollar has been on a tear downwards. You can see since the beginning of the year, I mean, it's lost 12%, which is, since January, which is a lot for currency. Anyway, the dollar is a wrecking ball. A falling dollar means looser global financial conditions. Our score for this system basically inverts the trend, which means weaker dollar is a higher score, more room for Bitcoin to run, basically. By the way, I won't be going over all of these every time I do the video. I'm going to do like a super cut, but this is just for the first one, so you can kind of understand what all of these inputs are, why they matter. Next up, some on-chain data. So MVRV is the market value versus the realized value. It shows basically if Bitcoin is cheap or overheated relative to its on-chain cost basis. We don't take that raw number. We track how quickly it's accelerating to catch early shifts in market sentiment. So rising MVRV means risk on behavior, basically. Next up, Meyer, whatever, Oscar Mayer Wiener acceleration. The Mayer multiple is actually a really simple formula. It just compares the price to the 200-day average. But it's not the level that matters here, it's the acceleration. So a rising multiple suggests momentum is building beneath the surface. You can see currently we have a score of 48, so it's like 50%. So nothing much there. Net liquidity, one of the most important drivers of Bitcoin. It's our master macro signal. When it rises, liquidity is flowing in. Bitcoin thrives in that environment, and that, this score tracks that. So we're positive, but not by a huge amount. So that's why basically the score is at 72 right now. The cycle phase is technically neutral, and neutral just means the score is kind of flat or trendless currently. So you can see it's going to have oscillations. It's not going to be perfect. It captured the last, peak really well. It captured the bottom really well. You can see I shaded green and red when it's at the extremes on either end. But for neutral, it's not giving a clear signal in the short term. Liquidity and inflation and momentum are in balance, basically, or conflicting. So, again, I'll preface this by saying my long-term view for this cycle is I'm very bullish into Q1 2026. I expect the ISM to hit, 55, 60 by the end of the year or Q1 of next year. So that is going to be very bullish for Bitcoin. So that's it. That's the macro and liquidity regime tracker. A lot of inputs behind the scenes. So hopefully you enjoy this. You can get this on TradingView. I do share it. I don't share the source code, but I do share the script, so you can add it to your charts. That's pretty much that. So let's jump into the next section, which is the data for this week. So what actually happened? If you haven't used this site, this is an amazing site. It's Forex Factory. You can filter the calendar events, and I just do them by red folder USD. I don't really care about any other events. I mean, this is the big one for me. This is what I track. These are a lot of my inputs for the liquidity tracker. So let's get right into what the hell happened this week, right? So first off, flash manufacturing PMI came in a little bit above forecast. This measures manufacturing activity, right? So above 50 basically signals expansion. It's staying sort of flat still. So the economy is basically growing modestly. That keeps recession fears in check. It doesn't scream stimulus incoming, but it doesn't justify aggressive tightening. So that is what it is. Flash services, services are important. They dominate the US GDP. So 53.1 is a good score. It shows expansion. It is down from last month, but that's actually a good thing because this slight cooling could indicate a softening economy in the Fed's eyes, right? If you're looking at it like you're J Powell, that supports the case for further rate cuts, right? Which is obviously bullish for Bitcoin. Powell testified earlier this week. I didn't really take much out of that. It's basically a nothing burger. Him and Trump are still going back and forth about rate cuts. If you want my opinion, no one wants my opinion, but who cares really? They should be cutting rates. And we'll look at rates next. That's going to be something we're going to look at. We're going to look at the forecast too. But let's finish these. And final GDP quarter over quarter. So this was actually a pretty deeper than expected contraction, which means growth is decelerating faster than the markets thought. This boosts the case for easing. That might inject liquidity, right? This will, if you're looking at this from J Powell's thing, you're like, okay, it might be time to lower rates. I mean, the US is behind the curve. Europe is lowering rates. China's lowering rates. It's just the United States. Unemployment claims. Claims came in lower than expected, which means the labor market's still resilient. this is good economically, but it makes the Fed's job a little bit more difficult. Strong labor can delay rate cuts, and they have been talking about that. It is what it is. So unemployment claims, that's pretty much it. Now, PCE is the Fed's preferred gauge. So a print of, an increase, it shows that there's pressure, right? So that might nudge them closer to cutting. So this is actually all pretty beneficial in terms of expecting liquidity and thinking that the Fed is going to cut rates. And we'll move on now because that does show in the data. So the CME Fedwatch, I looked at this last week, and this is for July 30th. So literally a month from now. This was 90% last week, or 95% that they would not cut. I think it might have 4 weeks ago, it was even higher. It was 98%. It was basically a shoe-in that they were not going to cut, right? This is the current target rate. Now there's a 20% chance that they're going to cut. So 1 in 5. All right, we'll see. And then for September, it's pretty much a lock that they're going to cut. I mean, pretty much a lock. Things can change faster than you think. So we'll kind of see what happens with that. And then something else I like to look at is actually this chart. So this is next month, and this is kind of what we're looking at. So looking at this, you can kind of tell what the trajectory is. So by, March 2026, we should be at 3.2 to 3.5% at minimum, which will be good. So I think this is probably the cycle peak-ish, and we'll see that now because we're going to move on to the last section, which is my portfolio and Bitcoin macro/liquidity playbook, whatever you want to call it. And I'll kind of explain this really quick. So yeah, you can see my cycle peak estimate, Q2 2026, extremely bullish, like off the charts, 104%. I'll explain that too. It's just because of the weighting and the scores here. You'll see some things that are redacted, and I can't share them because I pay for institutional research. There's a lot of data in there. I basically take a composite of the overall sentiment, like based on this data, are they risk on or are they risk off? All of my quote unquote institutional research is risk on. The one I trust the most, which is the top one, not just because it's more expensive, but because I just trust their research. They have an amazing track record. They're bullish. They're risk on. The second one I use, also amazing research, extremely bullish. Like out of the 5 sort of results they have, we're in the best environment that you could possibly be in. So that's why I gave it a score of 1.5 for 104%. I also use some kind of like high level macro on-chain data that we'll take a look at. This is straightforward. We're super bullish. I'm basically, buying and more if I can on the dips and holding until January, February, March, sometime next year. So let's take a look at these 3, which are the ones that I can actually share. I do have a crypto quant dashboard that's available if you want to take a look at it, but please be my guest. I'm trying to figure out where to put my webcam, probably right there. So you take a look at it like this. I do use the IFB. Yeah, I'm not too crazy about this one. You can see it's pretty decent, but in my opinion, it should have turned bullish already, and it has not. So that could be a signal in itself, but you'll see it's rated here as bearish. The Bitcoin bull bear market cycle indicator by Julio is really good as well. So we're slightly bullish, right? Not super bullish like in some of these other periods. Obviously, I think that'll be later this year, but we're slightly bullish. And last but not least, if you don't follow Axel Adler on X, definitely do. He drops amazing alpha and charts every day. So shout out to my man Axel. But yeah, this is a great score. This, again, we already have MVRV in the indicator, but I still like the way he did this. So bullish, that score is a bullish on the portfolio charts. Now, I'll be adding to this. I had a bunch of other stuff on here. I just didn't think it worked that well. I'm constantly refining and tweaking. You can see this is V1.51. I literally started at V001. So it's been a while. I actually had a ton more in here, like probably 7 or 8, 9, 10 things in here extra. And I just thought that a lot of it was just noise. I just wanted to cut through the noise and keep the signals that made the most sense. That's pretty much that. I'll be doing these every week. I hope you enjoyed this. If you have any questions about any of this stuff, feel free to drop a comment, shoot me a message on X, and I will see you next week. We'll be doing a July 4th special macro end of the week analysis. Have a great holiday. Have a great weekend, and we'll see you next time. Thanks for watching.